Yeah, hello, what up my people, welcome back to my channel once again. So today I'm going to be sharing with you guys my trade recap from Friday 24th, I'm sorry, Sunday 26th 2025 to first I think 30th of October 2025. This is 31st Friday October 2025. So this is the last trading week and welcome to a new month, November 1st. So this trade started from London session. I didn't trade Asian session that very day. London session. This is the green bar. That is the London session. So why I wanted to trade this particular low was because of a support that I saw, but the market ended up breaking that support, and irrespective, based on the London session, I was supposed to take note of this resistance that it was actually reacting from, but that very day I took this particular loss and I lost this trade for London session. So after that, based on my psychology, I didn't trade that very day anymore. And no, that very day on Monday, I saw this nice double engulfing with nice liquidity, nice inducement, did not tap into the resistance, and I was looking too long from this particular zone. Now I wasn't supposed to take this particular trade, but because it actually aligned with all my rules. This is my support here, and I always look at consolidation before that my support. We had a lot of consolidation before that support. Even the market open for Tuesday, yes, market open after the market closed, sorry, around 10 p.m. Even when the market resumed, it didn't still tap into this particular zone, and I was looking at immediately the market come into this zone. I was looking at to buy to this particular zone, and that was what happened that very day. That's Tuesday around 12:20 a.m. That's the next day, Tuesday, and I caught this nice 4:1 RR. That's on Asian session. So after that, I waited for London session. I didn't see any nice trade, because if you will look at, you will see that all the good runs have happened in Asian sessions. Look at this huge run. Look at this huge run from this particular zone here, cleared this first zone, second zone, third zone to the fourth zone. What would I be buying here? Nothing. So London session has already, Asian session has already cleared out all the zones, and I wasn't looking at to buy or sell at London session. So I waited for New York session. So when I got to New York session, I saw consolidation around this particular resistance, and what I was looking for was probably a tap into this support before it goes up, but no, gave me a nice 1:1 RR and reversed and hit me out on BE. So I won't call this a loss, it's actually a break-even trade, so there wasn't any loss here. I managed my trade very well that very day. So after that, I didn't take any other trade again. Moving to Wednesday. Wednesday was funny. Was funny. You see, there is a order block here. There is a clear order block here on the 15 minutes time frame and also on the 5 minutes time frame. And on the 15 minutes time frame, we also have resistance here lying around this order block. So I was looking at to actually long this trade, because most of the time, if you know this particular trade on order blocks on gold, order blocks gets rejected most of the time, and this particular day swept the liquidity at the top of this particular order block and came down to the next zone before it started buying. So that very day I lost this trade based on Asian session. But immediately I lost this trade, I was waiting for London session because I knew it was going to continue buying, and immediately it got to London session, I was waiting for a retap because I saw the break of this zone and I knew that breaking this zone is only going to come back, retap, and continue buying. And I was able to buy from this zone to this zone, and I got out with a 4:1 RR. After taking this particular trade, New York session, I wanted to trade from this particular zone to this zone, with some couple of reasons on the 15 minutes time frame. Let's go to the 15 minutes time frame and see that reason why I wanted to trade this particular place. And what happened was that on New York session, London session going to New York session, I saw a 50% mitigation. After it mitigated 50%, I bought, gave me a 1:1 RR, and boom, came back, reversed, and took me out. I'm going to talk about the improvement I make about my trading based on taking partials. I've been trying to implement that for a long time, but being that I was so used to catching long runs, I've tried to implement taking partials, because sometimes as a trader we are not supposed to lose everything, but because we don't take partials, a lot of things happen along the line, and boom, no time. So that's why I want to talk about that at the end of this video. So now, after this particular trade after this particular loss, I didn't take any other trade on Wednesday again. I waited for Thursday, and Thursday London session, the confluence wasn't too much. Very simple confluence. I was waiting for a sweep of this particular liquidity. I was just waiting for the sweep of this liquidity. That was what I was waiting for. And immediately the market came, swept this liquidity. I didn't sell immediately. I waited for the market to break. I was on the 5 minutes time frame actually. I waited for the market to break under this particular trade. And the moment I saw the body candle closure inside under the resistance, I entered the trade immediately. Gave me a little bit drawdown, and boom, straight to my TP, and I caught a nice 3:1 RR. It is a 4:1 RR. This is 3.59. If I reduce my SL, so it's going to be 4:1 RR. That very day I made 4% actually. And after that, after this particular trade, it was a London session trade. After this particular trade, I caught this as a 45 minutes time frame support. Now let's go to the 45 minutes time frame. I didn't hold the trade for a long time, but the 45 minutes time frame was the confluence I used to catch that trade. Where is it? Where are you? Sometimes aligning the higher time frame is the best way to catch nice trades. So my 45 minutes time frame was aligned with what I wanted to do that very day, and boom, I was in the trade. Now this is the support for my 45 minutes time frame. I marked my support for 45 minutes time frame, and I was looking to exit at this particular point here, but due to the market condition, I exited at this point. Why I exited at that point is that buyers are getting exhausted already. I knew that the market was going to come back to retest and take some people out. Can you see? If I was still in this trade, probably it might not take me out, but it might give me a little bit drawdown. But I knew it was coming back to take some people out before it goes my way. So I decided to take profit at that point. And it gave me a nice 3:1 RR. Can you see what I was saying? The market still came back, took a lot of buyers out. Can you see at this point? This is where my stop loss is, and that is where the market reversed back again. Took some people out, early buyers, before it started going for its way. And if I didn't been I hold the market, I would have caught a nice 6:1 RR. But that wasn't the main goal. What we are looking at is to catch what is meant for us, not looking at others. So that was how I took a nice 3:1 RR. Didn't trade this particular trade. And after the whole run, I was expecting a pullback. Now, why? How did I catch this pullback? Fib level. I used fib level to catch this particular pullback. I marked from the top of this particular run to the bottom of this run. That means from this top here to this bottom here, and I was looking at the 50% rate. And when the market came, tapped into the 50% fib level, 0.5%, and I took profit at these highs. And immediately I took profit from these highs, came back again, retested this particular zone before it started going up one more time. So that is these three nice trades that I caught on Thursday. And that same Thursday, I saw a nice confluence of a previous day high. I was expecting to take this particular trade again to these particular lows, but the market ended up taking me out. But risk management that very day covered me. I didn't risk too much, and that was how I lost this trade. So got 3 trades on Thursday and lost 1 trade. So on Friday was funny. Friday was funny, but Friday still went well for us. We still caught a one nice trade on Friday due to some higher time frame confluence. So now what happened on Friday? Didn't take any trade on what do they call it? I didn't take any trade on New York and on Asian session, and I didn't take any trade on London session. I waited for New York session. And why did I take this trade? So I have a higher time frame indicator here. It's called ICT higher time frame candles. Now I'm going to explain why I took that short buys. If you look at this particular lone candle here, let me increase the height and the width. This is a 1 hour time frame candles here. This is 1 hour time frame candles, and this is 4 hour time frame candle. Now why I use this is because of higher time frame confluence. That's the only reason why I use this indicator. And when I saw imbalance, this nice OCL here, also lapping with a 4 hour OCL, I was looking for a scalp to buy to this particular zone, because if you have an OCL on the 1 hour time frame in line with an OCL on the 4 hour time frame, in line with an order block on the 5 minutes or the 15 minutes time frame, trust me, you're going to catch like 3:1 RR before it reversed. And that was what happened. So this particular line was what judged that case. This is an OCL here. This particular OCL was the confluence here, and for the 4 hour too, this is an OCL here. So if you look at here, you will see that the market reacted, came back, and still took these particular highs. After it took these highs, it started coming back down, and that was the confluence I used for this particular trade. So that means on the 1 hour time frame, it is an OCL. On the 4 hour time frame, it is an OCL, and on the 5 minute time frame, it is a lone order block. So let me draw the order block here. Normally I'm not supposed to draw together with the wick, but because it is a small wick and a small body candle, I would draw it together, and this is the confluence for this trade. Now why did I also enter this trade? Because I saw a first pullback. You see, after this particular run, this is the first pullback for the run. That is what I would call inducement. It didn't come back to tap into this particular level, and immediately when the market came to actually take out that particular OCL, fill up the imbalance before it actually starts coming down. And that was how I took this nice 4:1 RR. So that is that for this week, and those are the trades that we took for this week. So let's count our TPs and SLs for this week. This week was actually a good week because the whole month went so well with some nice trades, and that is it for that. So the first trade for the week was an SL. This is number one SL, 1 TP, that's 1-1. 2 SL, that's 2-1, 3 SL, 3-1, 3-2, 3-2, 4-1, 4-2, sorry, 4 SL, 2 TPs, 4-3, 4-4, 5-4, that's 5 TPs, 4 SL, 5-5, 5 TP, 5 SL, that's 6-5, 6-6. So we got 6 TPs, 6 SL, but based on RR, we are actually in profit for this particular week. So that is it for that. So based on what I want to actually improve in my trading also is taking partials, because after watching all my documentation for the whole year, because I've been documenting my trade recap now since January this year, and now we are in November. I promised myself that I was going to document all my trades from the beginning of this year to the ending of this year. And to God be the glory, today makes it 11 good months that I stayed consistent with documenting my trades every single week. So I was able to see that a lot of my trades are very profitable, but because I wasn't taking partials, looking at big RRs, I've noticed that at some point I was supposed to be more profitable than this. Yes, I am profitable, but I was supposed to be more profitable than this if I was taking partials. So from this particular 1st of November, I've changed my profit strategy. The moment I get to 1:5, 1.5 RR before the 2 RR, before 2%, the moment I get to 1.5% of that particular trade, I'm taking out 50% of that trade, and I will allow the remaining to run. And that is my rules now. The moment it gets to 1.5% of my trade, I'm taking out 50% of that trade. I'm not chasing big RRs anymore. No matter how small it is, I'm going to take profits. Because most of my losses always gives me 1:5 RR before it returns back to his to hit either BE or SL. And that is what I am changing now. I will be taking profits no matter how small it is, either from 1 RR or 1.5 RR. That's 1.5% of the whole trade, because I normally target 1:4, 1:3. The lowest I target is 1:3, and sometimes it gets to 1:2, and it reverses. Sometimes it gets to 1:2.5, it reverses. Let me give you an example of what I'm saying about reversal. Look at this particular trade here. This trade gave me a nice 1:1, 1:1.5 RR, and it reversed and hit me out on BE, break even. Had it been I have taken 50% of that trade, I won't even be on break even. I will be in profits. That's example number 1. Let's look at another one. Look at this trade also. This trade also tapped me in at this point, gave me a nice 2 RR, but I didn't take the trade. I didn't take profits. It came back and hit me on BE. So that's why I've been able to look at all these based on my documentary, based on my journaling on this particular channel, and I've been able to come into conclusion that I will be taking profit on either 1 RR or 1.5 RR. So that is my decisions, and thanks for watching my trade recaps, guys. And thanks for watching my trade recap, guys, and I will catch you guys on the next one. Peace out.